Welcome everyone. Today I try to discuss about the economical impact and different kind of interesting things in the economy, especially the income distributions, poverty, discriminations, and those who live in the developing nations. They have this kind of plans that they have to solve these income discriminations. They have to solve this kind of poverty. They have to solve different kind of social inequality. And if they can solve these things in a proper way, in a proper manner, that time they can actually create proper values. That time they can add a real value in the society. So for that particular issues, I have to discuss about the income distributions, poverty and discrimination. What is the purpose of this topic? Majorly to analyze the distributions of income, poverty, wage discriminations. What is poverty? Poverty can be defined as the absolute term and relative term. So when what is poverty is absolute terms. A dollar figure represent level of income per year required to purchase minimum amount of goods and services to meet the basic needs. So what is poverty in relative term? A level of income that places a person or family in the lower, say 20% of all person or families receiving income. What is the poverty line? The level of income below which a person or family is considered to be poor. It is based on the cost of minimum diet multiplied by 3 because two low income families spend about one third of their income of food. So how much income is really required to make ends meet? Adjust the federal estimate. Based on the government estimate, what is the annual cost of the food for a family for? Let's say a family yearly $23,050 they expend for food purpose, and they have 3 family members. So per family member uses $7,683.30 for food purpose. So if annual food costs represent 1/5 of a family expenses, how much money does a family need to purchase food and everything else is needed? So 7,683.30 equals to X. So 20 equals to 100. So it will be 7,683.30 multiplied by 100 divided by 20. It will be $38,416.50. Anti-poverty programs are classified into two broad type of estimates. Number one, cash assistance. Number two, in-kind transfer. So what are example of the cash transfer program? Number one, social security. Number two, unemployment compensations. Number three, temporary assistance to needy families, TANF. What are in-kind transfer? Government payment in the form of goods and services rather than cash. This is actually term kind transfer. What are some example of in-kind transfer? Medicare, Medicaid, food stamps, and housing assistance. What are some criticism of welfare? Work disincentives, inefficiency, and inequalities. So there are many reforms of the proposed in the society. So we're going to discuss about what are the some reforms proposed. There are two things. One is negative income tax and another one is workfare. So what is a negative income tax? Negative income tax is a plan under which family below a certain break-even level of income would receive cash payment that decrease as their income increase. What is workfare? To keep their benefit, welfare recipients must perform work activities within 2 years of receiving welfare or risk losing benefit. How does, if we know that discriminations like gender discriminations and many kind of social discriminations also happen in this society, especially in the COVID period, we find this is the very important thing. So discrimination in the workplace can cause the equilibrium was to be power for the group that is being discriminated against. What is comparable oath? The principle that employees who work for the same employer must be paid the same wages when their job, even if different, requires similar level of education, training, experience, and responsibility. GDP, gross domestic products. This is one of the very important thing right now we're going to discuss. What is national's income accounting, NI? The system used to measure the aggregate income and expenditure for a nation. What is GDP? GDP is a gross developments production. So GDP is the market value of all final goods and services produced in a nation during a period of time, usually a year. What are the final goods? Finished goods and services produced for the ultimate users. What are intermediate goods? Goods and services used as input for productions of final goods. Does GDP count intermediate goods? No. To avoid double counting, GDP only measure final goods and services. What is an advantage of using GDP? GDP measure value using dollar rather than a list of number of goods and services. Does GDP measure second-hand transactions? No. Current GDP does not include the sale of a used car or the sale of a home constructed some year ago. To include this item would be double counting because they were counted in GDP when they were new. What is transfer payment? A government payment to individuals, not in exchange for goods or services currently produced. Such non-productive transactions are not counted in GDP. Generally, government payments to individuals through social programs such as welfare, student grants, and even social security. Does GDP measure non-productive financial transactions? No. GDP does not count private or public financial transactions such as giving gift, stock, bond, or transfer payments. What is a circular flow model? A model that shows us how all the pieces of the GDP puzzle fit together. Basic circular flow model. If we have a factory markets, then factory payments and factory of production go to the business, and business has demand and supplies, they go for the product market has goods and services and spending, they go for the household, and household also maintain the supply and demands. This is the circle. This is actually a circle of the of the model that how actually whole market are moving right now. What is expenditure approach? The national income accounting method that measures GDP by adding all spending for final goods and services. What are the four sectors of GDP? GDP has consumption, investment, government, foreign. So GDP equals to C plus Y plus G plus X minus M. Gross domestic product using the expenditure approach. Here is the sum of the example of the national income. So personal consumption expenditures, durable goods, non-durable goods, services, gross private domestic investment, fixed investment, change in business investment, government consumption expenditure and gross profit, federal, state and local, next exposure of the goods and services, export, import, gross domestic products. These are the major issues. So what is the income approach? The method that measures GDP by adding all incomes. What are the income components of GDP? GDP equals to compensations of employee plus rents plus profit plus net interest plus indirect taxes plus depreciations. What is compensation of employees? Income earned from wages, salaries, and certain supplements paid to laborers. What is rental income to measures? Rent and royalties received by property owner who allow others to use their asset. What are the two income categories? Property incomes and the corporate profit. All income earned by the stockholders of the corporate regardless of whether stockholder receive it. What is net interest? Interest earned from the loan of business. What are the indirect business taxes? Taxes levied as a percentage of the price of goods sold and therefore collected as part of the revenue received by firm. What is depreciations? And allowances for the capital oath for production GDP. So in the gross domestic production using the income approach in 2009, let's say there is a compensations of employee, there is a real-time income, there is a profit of income, corporate office, net interest, indirect business tax, depreciation, gross domestic productions. These are the way we can find out the real amount and the percentage of GDP. Expenditure and income approach to GDP. And then what are the shortcoming of the GDP? Uh, Shortcoming of the GDP. So in this shortcoming of the GDP, if we focus on that particular particular points, we figure out non-market transactions, distributions, kind and equality of the production, neglect of leisure times, underground economy, economic bats. What is the conclusion from the shortcoming of GDP? GDP is quantitative rather than qualitative, measures of output of goods and services. What other national account measure economic performance? National income, personal income, disposable personal income, nominee and real GDP. So here is the national income calculated from the gross domestic product 2009. Gross domestic product is GDP is 14,256, depreciations minus 1,968. So show national income will be 12,288. What is national income? National income is the total earned by resource owner, include wages, rent, interest, and profit minus depreciation. National income is income earned by household. So personal income calculations. If we want to calculate the national income statement, national income is NI, and disposable personal income 10,924. Four measures of the macroeconomics. If we want to identify and justify the macroeconomic concept, then we have to find a consumption plus investment plus government spending plus net export, depreciation, GDP minus depreciation, national income minus profit minus FICA plus transfer payments, personal taxes. Personal income means personal taxes. So GDP is equal to national income, it's go for the personal income, and it's go for the disposable income. So if we look at the what is nominal GDP. So for this nominal GDP, the value of all final goods based on the prices existent during the time period of productions. What is the real GDP? The value of all final goods produced during a given time period based on the prices existing is a selected based year. What is the chain price index? A measure that compares change in the price of all final goods during a given period to the price two of those goods in a base years. So real GDP equals to nominal GDP divided by GDP chain price index multiplied by 100. So nominal GDP, real GDP, and GDP chain prices index in 1960, nominal GDP was $526, real GDP $2,831, and GDP chain price will be 18.60. So same thing in 2009, nominal GDP was $14,256, real GDP is $1,287, and GDP chain price $109.77. So in the nominal GDP, real GDP, and the GDP chain prices index, if we want to focus on that particular points, we find that it has real GDP and nominal GDP billions of dollars, and it has its years. In 1960, it's less than 2000s. In 1970s, nominal GDP was around 2000s. 1980s is less than 4000s. 1960 is around 6000s. 2000s it goes around 10,000s, and 2005 it was around 12,000, and this is the best year. So real GDP was in 1996 is less than 4, and in 2005 they cross each others. and this is also around 12,000. So this is the base year for these things. So this is the basic things we're gonna discuss. We discuss about the real GDPs and the real gross real incomes and all of the specific things. And present world, if we see, then COVID-19 periods, there are actually many people's they're losing their job. There are many people's they're losing their factors. There are many people they are actually come up with the different idea, factors, and initiative. So in that particular times, we have to understand and we have to focus on that what's going on. Many of the country, they are losing their GDP because of their gross domestic productions is not good enough. They're losing their productions. On the other hands, if we go for the national production on also decreasing because of the COVID period. Our supply chain is not working properly. People demand goes down. Many people losing jobs. This is the ultimately the fact. This is the ultimately the reason why many of the organizations, why many of the peoples and many of the corporations, they have to do shutdown. They have to shut down their company. So in that situation, actually government has to take a lot of initiative. Government has to support the corporations. Government has to take necessary initiative to support small organizations and small medium enterprise. By this way, they will ultimately achieve their goals, and by this way they will ultimately make the proper decisions. So every small organizations, first thing first, you have to understand your local demand. Then you have to produce your product or services. Number three, maybe you can utilize your employees in diversified way. Do not cut down your employees, because if you cut down your employees, you do not get the ultimately result. So you can use them in a diversified way. Maybe you can focus on a specific area, and you can give them different kind of service, different kind of support, and different kind of things. By this way by this way, actually we can identify the way. So when we can identify the economic impact, when we can identify the economics values, and understands the proper economic things, that time we can help people in many ways. So thank you, Mohammad Sohel Rana. You are supporting us a lot for the World Talent Economy Forum, as well as School of Talent Economy. And thanks for your excellent comments. And if you have, or your people have, any kind of questions or any kind of things which is relevant to economy, I'm ready to give them answers. And by this way, we can create a better ecosystems, and it will help, I'm sure, this economical impact and economical things, it will help in many ways to our organizations, and we can develop our things in a proper way. Thank you. Dear audience, that if you have any kind of questions or any kind of things that we can help you, and we can support you, definitely we're going to do that. Thank you.